For the past several months, we've been working really hard on a daily process that now I'm able to follow and oftentimes have $3,000 to $4,000 single profit days. But recently in my last session, I actually had one of the biggest single trading days of my entire trading career. Okay, I was really nailing perfect areas in the market following this process, which opens up a crazy money-making opportunity in the market, whether the market's moving up or down. I'm gonna talk about how this process really works at its core and how you can actually start doing this today. So by the end of this video, you can pull everything up for free and start on this process. So this process is what I do on a daily basis to be able to have these $3,000 to $4,000 days. And just yesterday, I had a nearly $8,000 profit day. And maybe to other traders, that's not such a crazy day. But for me personally, a nearly $8,000 profit day is one of the biggest sessions I've had in basically almost a year and a half. And there's a mental switch that I've changed that allowed me to get there. And I'm excited to see how much I can do and document moving forward with you guys. But this is also a learning process for myself. But enough of that. I'm going to show you how we can get started to really start to scale this up quickly, to really start to get to that $100, $200 per day threshold pretty easily, and I think pretty quickly as well. Okay, so there's a few things to understand about this process. Like I said before, this process has no relevance on whether the market is moving up or down. It can be any market, it can be any condition. And the good thing about this is that when markets are moving down, like for example, we're seeing in crypto right now, people are getting smoked and no one wants to do anything in crypto. Yesterday, I was able to have the biggest session ever while the market was literally having one of the worst days ever. So not only is this a massive opportunity on a regular basis, but it's also a massive opportunity when markets are not presenting other good money-making opportunities. But there's a few things that you need to understand fundamentally about this to start it the right way. This is what most people really don't grasp. So my process is basically finding small patterns in the market and doing 3 to 4 of them a day. And at the end, if we follow our process, statistically, we're in a good position to be right a little bit more than when we're wrong, which allows us over time to compound and make profit. So the two things that I'm paying attention to that most people don't really understand in this process is I can really boil it simply down to is obviously finding a pattern in a process, which I'm going to show you in just a second, but the percentage of the time that pattern is right and how much I'm making when I'm right versus how much I'm losing when I'm wrong. You can see in this example, if my strategy tells me to enter here and price moves here before coming down here, that's going to give me 4.55x what I'm risking, which is my -1 here. So it turns into sort of a game here, and over time, we're going to be able to use data to find the average of this, which is going to allow us to follow this process smoothly. Before I outline what I do in this process, I want to sort of show you a little bit of context of how it works. So this is a 1-minute strategy, which means that I'm looking at whatever I'm trading in 1-minute increments. So each of these candles is showing me how much the price has moved and where over 1 minute. We're looking here to start to try to find patterns. So we're going to be looking at trends here. We're going to be looking at wave counts. We're going to be looking at these boxes here, which I'm going to explain in a second. And using all of these things in conjunction, I'll give you an example of some of the cool ways that stuff like this works. If I take this level and draw it against this level, say the chart were to come back up to this key level, if I were to anticipate that the price was going to reverse here, I could actually enter, contain my risk, and now I'd already be up 2.7 what I'm risking on the trade just by being able to identify key areas. Now, this is really not the strategy that I'm following today, but just to sort of show you how these patterns work and how we can start actually putting ourselves in positions where we can make money. So we're going to be finding patterns on charts like this. Okay, but let's get into the bones of what I actually look for, and then I'm going to start showing you examples of it. The first thing that I'm looking for is something called a 5-wave pattern. So just like those trends we just looked at, they tend to move in 1, 2, 3, 4, 5 wave patterns, followed by a move up like this, which is A, B, and then C to complete the basically reversal of this trend. Okay, so being able to look at trends this way is going to allow us to generally pick areas where the price is already likely to have exhausted, where we're anticipating we could get a fresh move up. Now, obviously, we can't just use only this because we have to get more detailed, but this is how we start to refine our process down. Okay, the next thing that I'm looking for is something called overextensions. So there's a few indicators that we like to use for things like this, but one of the best ones is something called the Innovatrade Pro Plus, which if you want, you can go into the description of this video, follow me on Instagram, DM me the word tools, and I'll have a Notion sent over to you with all of these resources. You can add them right to your chart. But what this is going to do is going to show us areas where the market is potentially over or undervalued. So if we just look at our chart right here, we have a highlight strip right at the bottom of this market. Now we can't use this independently, right? Because it's not accurate enough. There's a lot of situations like for example right here where we get a highlight strip, price continues to move down. But in general, if we look at another highlight strip here, it will put us at least in a general area where there is a high probability of even a temporary reversal, and we know that we're in an area where a reversal is likely, because that's what we're looking to do. We basically want to find flips in price so that we can set our risk and look to get a major rewards if the price is to move in our direction. So I want to always be looking in general areas. We see another highlight here. This is where the market reversed. So once again, these key overextension areas where the market is likely to reverse is going to be another thing. So if we're finding 5-wave patterns, overextensions, the next key thing that I'm looking for is something called a fair value gap. Okay, what this means is that we have 1, 2, 3 consecutive candles where the middle candle, which in my diagram is right here, pushes significantly up, and the wick of the first candle and the wick of the third candle leave a space in between here, which is going to leave an area of inefficiency. Typically what will happen here is price will trade and then tend to trade back down into this area, and if it is going to then make another move to the upside, this is going to be oftentimes the key area where price will revert to. So I'm looking for a few of these things. I want to find overextended areas and then things with fair value gaps. Now, what I will say is on the private side of our trading team, we've run tons of data. I'll show you the data on the screen here just to give you an idea of what we've tested. All right, but we have a lot more confluences that will allow this process to become even more tighter and more selective on choosing winning trades. But what I want to show you here, I always want to be providing value on the YouTube side so that you can get started. You don't need to pay anything, and this is stuff that's applicable now that's going to help you. But we also have options. Obviously, we're professionals at this, so we're constantly working on data. We have full teams to do this. But this is going to allow us to sort of be more selective about where we're getting in the market in general. Okay, so now that we sort of understand 5-wave pattern, overextension, and fair value gaps, there's other confluences that I sort of sprinkle throughout the videos too, so you can watch more of those to find out. But these are going to be the main things that we want to look for. Now let's take a look at some real market examples of me doing this in real time. And I'm going to show you what I was thinking and how it sort of looks when you're doing it. All right, quickly before those examples, I want to show you how I set up my trading view so that you can start doing this for yourself. Okay, so if you don't have trading view, obviously you'll have to get that. But as far as indicators and things that I have on my chart, I have it set to regular candlesticks here. On my chart, I also have something called an IT foundation, which is once again in that tool resource. You can click on settings. You can copy these exact settings here. It's going to show us 9:30 when the New York stock market opens. You'll understand in other videos why that's important. Okay, I have this custom indicator, which is a private indicator. It's not a make or break, but it's something that we have tested with data that helps us. I'm not going to share it on the YouTube side. I have Lux Algo fair value gaps, which you can look up in indicators right here and just type that in. Okay, I have the threshold set to 0.15, which is basically automatically finding those fair value gaps that we were talking about before on our chart in real time. Okay, and then I have that Nevitrade Pro Plus indicator, which is showing us basically a cloud highlight RSI, or a relative strength index, which is showing us those over and undervalued areas on the chart. Then I just have volume. I'm not going to get into all of these details. I have other videos where I get into this. I can put a technical analysis card at the end of this video so you can watch that. The other thing that I add onto my chart is what I call my trading desk. This is a Notion trade tracker that I've designed that I also shared with you guys if you want it. Basically, I have all of my checklists to follow each time I'm in a trading session, along with system specific checklists to keep me on track. And then this is going to be the area where I can put all of my trade information and track my P&L. Okay, so I'll usually have this, my exchange, and then the chart set up, but we're going to focus mostly on strategy today. Okay, so let's take a look at me doing some of these trades in real time. So you'll notice I have my exchange pulled up, my charting pulled up, and then my daily trade tracker and trade desk pulled up. That's how I'm starting each session. So here you'll notice we have a nice push up in the market. Okay, we also have 1, 2, 3, 4, 5, a push down in A, B formed. Didn't record the cloud highlight RSI, but we have a highlight strip right here. And then you'll notice we have a beautiful fair value gap as this is starting to roll over this area. So I was looking at this as a high potential area to be able to start building one of those positions. Okay, so this is where I set up my position. Now I have one other cool thing to show you. You'll see I have this indicator, which is super cool. Basically, we built a custom indicator, which I also shared with you guys in that tool, where you can basically click 3 points on the chart. So if I want to enter here, take profit here, and set my stop loss here, I can type in the exact amount of money I would like to risk. So say $25, hit apply. And that's going to show you exactly how much I have to enter with, where I should put all of my other information, the expected profit, and the total risk on the trade. And I can move these and it will automatically update in real time. This is something cool you can add to your chart and that we've built completely free for you guys. All right, so I built a position and you can see I entered here. I'm down about $150 right now. I'm risking $500 on these positions, by the way. So price came up, I'm in the position. I'm expecting for it to come somewhere down into this area, right? With this strategy, it's mostly following and letting the trade sort of play out however it's going to move. So I anticipated we would get a breakdown. You can see how it responded really well off of that fair value gap, right? So we have all of our confluences hit, overextended area. It starts to pull in off of the fair value gap. You can see them up about 680 80. And then what I'm doing, once I get a break under this first small move here, I'm reducing my risk down to 0. This is something that's really important to do correctly in trading. When you're following a process like this, you always want, once you start to get momentum into your direction, you want to systematically reduce that risk. So if I'm risking $500 initially, trade starts to work. Now we can start to reduce the risk to break even. So even if you're wrong, now the only outcome is you make $0 or you make a bunch of money in profit. And those are your two only outcomes. It's all about hedging risk and reducing risk over time. So that's exactly what I did here. So now my risk is reduced to break even. You can see price almost comes up and tags that level, but actually responds really nicely off of this second fair value gap. And this is where we get another break under that key level. So this is where I'm reducing risk to over this high, which is slightly into profit. And then I just sort of let the trade play out. And what I was noticing is overall, Solana was very, very bearish on the day. And this is all happening while the market is moving down. So I'm up $2,700 with the market moving down. And you can see I'm capturing this entire move. So now I was risking this much to make this much. This means that even if I'm wrong about 5 other trades after this, I can basically still end up making money on the day just by letting the winners run. Okay, and this is one of the big breakthroughs mentally, is allowing your trades to fully come to fruition. It's really tempting once you see something go into profit, and especially if you've been on like a losing streak, you want to take money off the table quickly. You have to avoid that and let the trades run fully. And that's what I did on this trade. You'll see we got another really, really nice trade. I'm up almost $3,800, risking $500. This is a really, really big deal. This is why this session was so cool for me. So effectively, I've made up for 7 losses in a row. So I was able to make nearly $3,800 risking $500. That's a really, really nice risk reward. See right here, I took the trade off the table, and that was that. I logged it in my trade log. Okay, but this fair value gap and following those key areas put me in a position to be able to play a big swing in the market. Okay, and the cooler part about this is I can play it in both directions. So this was the move down that we had in the market. And then as we started to exhaust, I noticed that there was another fair value gap happening right here. So I went in to take a long position. Okay, so I set up a buy order here. I'm up 200, 300, 500. I was waiting for this high to break so I could set my stop loss to break even and reduce risk. Okay, we finally got a push over that high, so I reduced my risk. And then this is where price came sadly down and tagged that same exact level. Okay, so this was an example of a break even trade. I ended up losing a little bit off of fees, but still, once again, putting myself in position so that if this did want to flip up and move throughout the rest of the day, I'm going to be in the trade. I'm going to be making money off of that. If it doesn't, then I'm reducing my risk and I'm at least containing my risk. Okay, so then I set up a position. Price comes in, tags that fair value gap, and then just comes straight through, down 300-400 through the stop loss. I end up losing 619 on the trade, risking 500. Now, something to understand about trading is there are fees. So even if you're risking $500, if you're using a prop firm where you're using simulated funds, you're going to lose exactly that amount. But if you're using real funds, you're going to have to deal with something called slippage. Okay, so it's not all sunshine and rainbows. Okay, you're going to have losses as part of this process, but it can't be viewed as a bad thing. Okay, so in this session, this was another trade that I took. I got a highlight here. I'm still trying to find a long into this trend. This one was a frustrating trade. So we got a push up. So I entered here on this fair value gap. That was the exact point that I needed a response off of. So we got that trend break. Price is pushing up really nicely. I'm up like $700. Got a really nice push, $1,400. So this is where I reduced my risk to 0. And then this just decided to come all the way back down and then tag that stop loss for a break even. And then this actually throughout the whole day went all the way back up and would have been like a massive trade. Anyways, stuff like that happened. Okay, so another break even trade. But once again, putting myself in opportunities, reducing risk so that even if I am wrong, we're still not losing. Okay, here is one of the best trades. This was on a coin called Atom. Okay, I had a highlight strip here. We had a 1, 2, 3, 4, 5 wave pattern and a nice fair value gap right in here. So I took a position. I was able to get my stop loss really, really tight on this consolidation. So even with this tiny move here, I'm already up like $700. We get a big push in price. I reduce risk, almost comes back up and stops me out for break even, but doesn't, breaks a fresh low, then really starts to push down. This is where I'm up $4,000. This is where I was hoping we would get a really big sell-off and I might get like a $15,000, $20,000 day. I've been waiting for those, but price started pushing down. I managed the trade properly. All right, so pushing down, I'm up like 6,000, 5,000. And then here I reduced my risk to over this high. So I'm up, say $4,600. This is where I ended up taking the trade off the table. Okay, so I locked in right around $4,400 in total on that trade. So even being wrong like 2 or 3 times, I was still able to end the day up a little over $7,500. And I really didn't do anything all that miraculous other than let my winners run and contain the losses and keep them small. All right, but now let's talk about how you can start from scratch, take all of the things that you've learned in this video and actually apply it to starting this process for yourself. Now, this is something called called backtesting. And basically this is the first stage of actually learning how to do a process like this. Okay, so what you're gonna do is you're gonna pull up your trading view and you're gonna add all of these indicators that I showed you to your chart. And what you're gonna do is you're gonna click this top button here and you're gonna drag this blue line back to the beginning of wherever you wanna start trading. I usually start trading at about 9:30. We're gonna open up all of our indicators. Okay, then you can hold down shift and hit the right arrow. And this is going to populate candles. And we see we have fair value gaps here. We're looking for all of our rules to be hit and we can start looking for trades now. And basically you can start to see how in real time you would be making decisions to take trades. And one of the biggest things to remember, and this is something that's helped me progress through this process, I started here at backtesting, then I went to real trading. But what I actually did recently is after going to real trading, which is going to be a little bit different, I actually went back to the backtesting or the practice, taking what I learned from real trading to get a more realistic expectation of my backtesting. And this was one of the biggest changes in improving my trading. I realized I really in real life wasn't allowing the trades to run the way I would in a simulated backtesting environment. So I really wanted to focus on allowing my trades to run fully. And that's what I did in my last session, which is why I was able to make some of the most money I've made in a single session. So what I would recommend to you guys is practice this, go to real when you're ready and you know your system works, then go back to practice knowing what you know with the real, and then obviously go back to real, and that's going to get you closer and closer to your goal. Okay, but let's look at a few examples of just practicing. Okay, so we have some fair value gaps. This one would be in profit, but we didn't have any sort of underextended or proper wave formation to take along. So we don't have any fair value gaps yet. Okay, so now we have a very noticeable fair value gap. We also have a highlight here, which I'm liking. 1, 2, 3, 4, 5. 5-wave structure is there. So this is definitely a prime candidate for us to think about taking a short position. Okay, so I can set up a short there. I can put my stop loss outside of this area. You just want to find key areas to put your stop loss out. Take profit is to be determined. Okay, if you want to go so far as to build your position as you would in real life, you can click here, 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 $25 risk. And then we can go ahead and play this forward. That was our entry. Okay, so we would reduce risk here, and that would be a stop out for break even because we reduced our risk. And so what I do in situations like this is I'll click this text box and I'll just go 0. And I'm counting all the risk factors. If I lost, I would say -1. If I made it, I would count, say in this example would be 5.56. That way we can get a sort of a clear idea of what we're actually able to do over the session. We're going to look for another new extended area. All right, so we have a fair value gap produced sort of right in here. So once again, stop outside here. Price is starting to roll over. Price comes up, tags that level, breaks underneath it. Risk is reduced to 0 and eventually comes through and tags our take profit. There's different ways to take profit, of course, depending on the system. We have a few on the private side of our team, but what I like to do is just sort of draw trend lines here and follow along these trends. So I would move my stop loss once I had this break to over here, get another break over this level, and that's going to already lock in 3.2, and you just walk it down as you go. Okay, but you sort of get the point. This is going to be right where we're at, +6. Okay, so you can literally go through your chart and see at the end of the trading day how many risk factors that you would have. And say, for example, you're risking $25 times 6.3. That's going to give you plus $157 on the day, risking $25. Okay, but this is really the most important way to look at this process. You can go through and do hundreds of these examples to see where you actually stand and hard code it so far into your mind that all you have to do, use that calculator, risk that dollar amount, and follow the same process that you would follow in your testing. And approaching it this way and following this system, you can use it in any market and you're going to be far past the way most 90% of traders or people trying to make money in markets are going to be at just by following these few things. Of course, it gets more advanced, but I wanted to share this with you guys transparently, raw, minimal, and show you how I really set everything up, the things I've been working on, and how you can get started on it yourself. Hey, if you're still here, make sure you hit the like button, subscribe to the channel if you want to follow along with the live trade videos that I post, crypto updates, investing, everything. As promised, here's a technical analysis guide that you can check out to sort of delve deeper into some of these concepts I might have glazed over. Let me know in the comments if you like this raw style of video, but until next time, I will see you all in the next one.